Hi guys, Lee here from Trading College. On this video, we're going to talk about the risks involved in spread betting the markets and opening a spread betting account. The reason I'm talking about this at the moment is because I had a brand new client come to me this week for mentoring, and he didn't understand anything about spread betting, and that's perfectly fine. It's a new skill for him. Some of his friends had already been trading the markets and had been spread betting and making some decent profits and taking those profits out, not having to declare that to the tax man because it is under the gambling license, which is great for people. You know, the profits that you take out of a spread betting account, you don't need to declare those, but of course you need to get your own financial advice on that before you start trading. So I wanted to dive into something a little bit different when it comes to the risks involved in spread betting. It's a little bit different from just a normal share dealing account where you're buying stocks and shares for the likes of, if you're in the UK, you might want to buy some Sainsbury's or I don't know, some Tesco share price, or if you're in the US, you might want to buy some Tesla shares, or even if you're in the UK, you can buy Tesla shares through a spread betting account. But a spread betting account is a little bit different than a basic share dealing account. Now, I've got many accounts. I've got spread betting accounts, I've got CFD accounts, I've got share dealing accounts, ISAs and SIPs, which I manage myself. But let's just dive into trading through the spread betting broker, because I think a lot of times people miss out on something like, or understand what margin is and margin requirements. So I don't want to insult you, because you obviously know that when you place a trade or you invest in something, there is risk. You need to know that you have to risk money to make money. Okay, it doesn't matter whether you're spread betting or in a share dealing account, or buying a property, or buying an antique, or investing in Bitcoin, whatever. There is risk involved. Okay, spread betting account is no different than if you're buying something at this level and you want it to go up in value, and it goes down in value, then you're losing money. But you had to risk something to get the upside, get the uplift. Okay. Unfortunately, we do have to risk some money to make some money, and that will be a percentage of your trading account. We haven't got time to speak about all that. We'll be sure we cover that on other videos. But with spread betting, you are borrowing money to trade in the short term. Okay, so when you're trading the FX market, you're going to need to trade on leverage, or you will trade on leverage with a spread betting account. You are basically borrowing money in the short term, and the spread betting broker will charge you for borrowing that money overnight. All the brokers are a little bit different when they actually charge you. However, if you open a trade, let's say I'm trading the Forex, let's change the color of that pen, but I'm trading the Forex market and I'm trading the Aussie CAD here. And the Aussie CAD is something that I really want to go long and buy. Then I will use a daily funded bet. But if I want to open that trade, and let's get rid of all those tools, coloring tools there, they look awful. But if I want to open a trade and I want to close it in the next quarter, I can do that, and I can open a business quarter contract with the spread betting broker and say, by the time it gets to March, then I want you to close the trade. I can close the trade at any time I want to. Now with that, it's a little bit different from an overnight daily funded bet, because with a quarterly contract, all the costs are involved in the spread when I open the trade at the very start. With a daily funded bet, you get overnight interest charges, okay? And that's LIBOR something plus whatever it is. You have to do the calculation. But we're not going to talk about that at the moment, okay? That is some of the charges that you're going to have to take on with a spread betting account. But let's just dive into margin, because I think this is really important. And this is certainly a risk to some traders when they're spread betting the markets. They get lost in the margin requirements, and you don't have to do that. Now, margin is basically a deposit that you need to cover or have in your account to place that trade right now. So brokers in the spread betting world will have the same margin requirements. Other brokers, CFD accounts, and brokers outside the UK will have different probably margin requirements. Some of them will be very tight, some of them will be maybe bigger. Now, the thing that I get from the likes of the IG Index, and by the way, IG Index were the first spread betting broker, is that whatever trade, and if you think about this, it makes sense really, that if I'm trading the euro dollar, which is the most traded currency pair, there's lots of liquidity. I can get in and out the trade really quickly, and the risk to IG or the spread betting broker is low. But if I'm trading the Mexican peso, it moves 1,000 pips a day, or Bitcoin, which moves thousands and thousands of pips a day, the risk is high. And remember, the spread betting brokers do not like to lose money, so they'll require a larger margin. So always think, if you think the margin is high on a particular market you're trading, think about it. Is it a risky market? Is the volatility of this market really, really high? And if so, the margin will be higher because they'll cover their backsides, guys, believe me. And so several years ago, the Swissy sort of decoupled away from the euro, and after that all the Swissy currency pair margin requirements increased. Some brokers actually provided a guaranteed stop, which means they'll get you out of that trade at the exact price that you put in there that you want to get out. Well, at the time that we had that huge collapse in the Swissy against the euro, some brokers pulled their guaranteed stops, which is a bit out of order, but now they've reinstated those stops, okay, which is good. All right, so you want that stop to protect you at all times, and you want to be able to risk a certain amount of money and percentage on the trade and each and every trade that you place. And I think that very much goes for ISAs and SIPs and my pension, where I'm looking to grow that pension account with a SIP provider. I'm going to be risking only a certain amount of that account size. And so when you're using a spread betting account, you need money to actually cover the trade. Now you can see here on the left hand side, there's all the margin requirements. You can see this little terminology here. It says retail client. Retail client is probably you guys that are watching this video are new to trading. You're on YouTube looking for some new information. Don't forget to subscribe to this channel, by the way, guys. Trading College YouTube channel. We've got loads of stuff on there. And you are new, you're inexperienced, and you're learning. You're classed as a retail customer, a retail client to the broker. And then there's the other side of it, which is a professional client. Professional client has different requirements than a retail trader. They need to be far more experienced, done plenty of high position trades, and have a certain amount of money, liquid cash in their bank accounts. All right, so check out that. I think you need 2 out of 3 to become a professional trader, and I don't think there's any harm in trying to see if you can become a professional trader, because there's several benefits. Number one is that the biggest benefit, I would say, is that your margin requirement is completely different. So, and it's a lot less. So you don't, I suppose, if you've got less margin, it's taking up less of your account size, and you can do more trades. Okay. So if I take a little look here and show you the difference between a professional retail account, you can see here that on the left-hand side, it's the euro dollar. Now, euro dollar is the most traded currency pair. Very liquid indeed. Is it high risk? I'd say no, it isn't. So as a retail trader, you need 3.33% in your trading account. Remember your trading account, you've had that money comes from your bank or your debit or your credit card, comes into your brokerage account. It sits there as a lump sum every single day. Now you're going to need 3.33% in your account to place the trade here on the euro dollar. Now, there is leverage. I get 30 to 1. You get 30 to 1. Now, as a professional client, the leverage here is lower, 0.45. And what they really mean is that, number one, you've got enough money to cover if anything goes pear-shaped. Number two, that you're more experienced. You know what you're doing. You can take bigger risks, I suppose. But the key is not to take huge risks. You need to trade with a stop loss in place and only risk a certain percentage. Now, margin requirements can become really daunting to some people. You see here on the Aussie dollar, there's a 5% risk. On the Swissy, and I'll show you, I'll get the ticket up in 1 second with the broker, the margin requirement or the amount of money is greater. All right, so let's just go and get the euro. I'm going to bring the ticket over here. Now, I've just opened this ticket from the IG platform. And when I'm spread betting the markets, I am trading in pounds per point. with a spread betting broker, I can do £1, £2, £3, £10 position size. A lot of people, little tip here, you don't just have to do £1 and £2. You could do a position size of £1.34 if you want to. That called a couple of people out when I gave them the heads up of this, that you don't have to just do it in increments of one. You can trade the markets with a spread betting account at £1.34 if you want to. Now down here is the margin requirement. Now that is how much money, as I keep saying, that I have to have in my account to be able to open this trade. If I didn't have that amount of money in my account, I will be rejected. A little thing will come, a little box will come up saying, trade has been rejected, you do not have enough funds in your trading account. So it really is based on, it's not based on what people think as in a stop loss order or the amount of money that you're going to lose on a trade. It's basically based on, because I've not even put a stop in yet, it's based on the percentage. Okay, the percentage to open this trade at £1.34, multiply that by 12120.6, and well, I'm a professional trader, so at 0.45, that is my margin requirement. So you do need some money. You do need some money in your trading account, and a decent amount of money to make a lot of money. And so you always think about margin requirements. Now there is something called a margin call, and you may well have had a margin call before. And that is basically saying that the margin requirement now has gone beyond how much money you've got in your trading account. And in the old days, it used to be a good old telephone call for a margin requirement. Now it's just an automated machine will send you emails to either close the trade or to cover that trade and put more money into your trading account. So bear that in mind. Margin requirement is so important in trading, and there are times, I've heard this before, where somebody's been in a trade, they're losing money in that trade, but they want to place another trade. Maybe they want to trade on the euro yen, but they don't have enough money in the account to actually open that trade because their margin requirement's been eaten up, and many of the times it could be eaten up in the losing trade. So bear that in mind, guys. I stress that you've got to manage yourself, manage your financial position here with a spread betting broker, because it is all a lot different than just a basic share dealing account where you've got to put up all the money to actually open a position. All right, with a spread betting broker, you're borrowing money and you need a certain amount of money in the account to cover the margin. All right, so margin requirements are really important. Now, if I go and have a little look at the Aussie dollar, and I'm going to bring over the Wall Street market here, which is the Dow Jones. If I just start to type in position sizes, you can see that at the time I'm doing this, the margin requirements come up here. Okay, so for the Dow, I have to have a £140.26 in my account to open this trade. In the Aussie dollar, £34.90. In the euro dollar, to open a trade at £1.34, I need to have £73.08. And this all adds up. Now, as soon as this money is been put to one side, you're not losing the money. What's basically happened is they're putting it to one side to cover the actual open trade. Okay, that's horrendous drawing, isn't it? But you are covering those trades, and that money is put to one side. And that is to one side until you close the trade. Once you close the trade, if you're going long the euro dollar here buy, okay, you get your account, you get your ticket up, and you close the trade by clicking sell. Once you close the trade by clicking sell, that £73 goes back into the total of my account, and now I can use that margin to actually trade and open other positions with this spread betting account. So I really just wanted to go over margin a little bit here and check the broker that you're going to think about opening an account. If you look at the spread betting broker here at IG, same margin requirements with Ounda, with the spread betting account as well. You're not going to go far wrong with any of these two brokers. Okay, bear in mind that the margin requirements will eat into your total account, and I've got I think that you should always trade way beyond where you think you should trade. Spread betting is risky. It is high risk, but it's risky walking down the street every single day on the way to work as well. And so you've got to manage that risk. You've got to make sure that you're not trading with huge position sizes, and you're inexperienced and you don't know what you're doing, and also that you're trading around, I don't know, Brexit, or you're trading around the new president election. Just take your foot off the accelerator with big news announcements like that, and just be really sensible. And if you're really sensible and you have a good trading strategy, and you risk only a small percent on each trade, and you place those trades to the best of your ability, and you get some really good trends forming with that trade, and it works really well, you can grow your account very nicely indeed. And you can see, let me just show you 1 second here, if I can find it for you. If I just get the broker up here, let's just bring it down. Just right here, look, 75% of retail investors lose money when trading spread bets and CFDs with this provider. Every broker by law has to have that on their website. Some of the brokers are up into the late 80%, guys, 89%. Something's not quite right, is there? Something's not quite right. Obviously, I'm not partial to the information within that broker, but if one broker's got 75%, one broker's got 89% retail traders losing money, maybe think there may be several factors. Maybe that the spreads are wider. Maybe that there's shenanigans going on with that broker. I don't know. I'm not saying that there is. I'm just saying you've got to look at that, because that for me is really important. So make sure that you look at the percentage of retail investors' accounts lose money with that spread betting broker. You want as low as possible. All right, so margin requirements are important. We'll talk about overnight interest charges on another video, but we've gone 15 or 17 minutes with this one. Please make sure you subscribe to the channel, guys. We're going to have loads of videos about things that are different than just, here's a trade strategy. We've got plenty of those trade strategies on our website and on our YouTube account, but we're going to go into real life trading and what it's really all about for you guys out there. So make sure you subscribe. You'll get notification of the next video that gets uploaded. Speak to you soon.